Hi there, welcome to Kneppy Invest. With well over 2,000 companies on the ASX, it is almost an impossible feat to know about every single company on the ASX. And that's not talking about all the other companies around the world. So I'm doing a lot of research on American-based companies on the NASDAQ and the New York Stock Exchange, which gives me less time to focus on ASX companies. But on occasion, I will come across an announcement of an Australian ASX company that I have done no research on in the past, and that particular announcement has piqued my interest. And that's exactly what happened with the company I'm featuring in today's video, Catalyst Metals. I saw their December quarter results, and I thought, that's a pretty solid result for a company that I don't know anything about. So I have dug a little bit deeper, mind the pun, into this company, which is an Australian-based gold-producing company. I've already given away that Catalyst Metals is a gold-producing company. They're also an exploring company with 3 projects in Australia, 1 in Tasmania, 1 in WA, and 1 in Victoria. They've also going through it seems like a compulsory acquisition of another mining company called Vango. At this point in time, they own about 75% of shares of Vango, and they keep increasing that. So you'll see almost every day another announcement from Catalyst in regards to their holdings of Vango. Now, I wanted to see the history of this company just to see if they were doing anything else in the past, where they're exploring for other elements. And in fact, when this company founded in 2006, they were all about molybdenum exploring. And I know nothing about that element, but that's what they wanted to explore. And then they quickly transitioned to uranium. I think that was in 2007. At that point in time, uranium was going through a boom. This was all at their Mini Creek project in WA. And then more than likely, they transitioned from uranium to gold back in 2011-12 after that tsunami and that nuclear reactor problems in Japan, which would make sense, but I don't know any history in regards to that. So listed in July 2006, CEO is John McKinstry, and one of the largest shareholders of this company is another gold producing company called St. Barbara with a 12.9% stake in the company. Currently, the market cap of Catalyst Metals is $143 million. That's at a share price of $1.45, and the share price has been increasing recently, and that's sort of positive sentiment in this company share price is on the back of their Appendix 5C. And the ticker code for Catalyst Metals is CYL. These are the 3 projects that Catalyst have right now, and this is combining Catalyst and Vango, that compulsory acquisition mining company they are going through right now. And their gold producing project is in Tasmania, Henty, the northwest part of Tasmania, 23 kilometres from Queenstown. They also have another project in the Midwest region of WA called Merrimia. That's in advanced exploration. They have another project in Victoria, Bendigo, and that's in the exploration stage. Now, I did not go through the whole history of Catalyst Metals just to see how they acquired, if they did acquire this particular gold mine, whether it was through an acquisition, because a lot of these smaller ASX gold mining companies are in production because they have acquired a small mine from a bigger mining company. I've seen this a lot recently. It can work out fairly well, particularly if they can prolong the life of the mine. Anyway, so I don't know where they acquired this particular mine in northwest Tasmania, but has been in production for a while for Catalyst Metals. So let's go back 1 year ago just to see how this company has performed and has performed over the past year. So in the December quarter, financial year 22, this company produced $16.7 million in receipts and was operating cash flow positive by $3.2 million. Now, that's not the end of the story, because this company did spend $1.2 million on capital expenditure, and they also capitalized $2.7 million in exploration and evaluation. So even though they were operating cash flow positive, cash on hand did not increase all that much. In fact, it only increased by $100,000, and a lot of that was thanks to $1.5 million through a joint venture. They also repaid debt $500,000. So this company does have a little bit of debt as well. That's something you've got to keep in mind on moving forward. So let's just have a look at the December quarter results for financial year 23, just to see why this company did come onto my radar. And this was a really solid quarter for Catalyst Metals. And the problem with this particular quarter is it's only one quarter. We'll talk about why this was a good quarter for the company in the next few slides. Receipts to customers up a little bit from last year, up to 18.9 million. But the company was operating cash flow positive by $6.8 million. So a significant increase on 1 year ago. And for the first 6 months of financial year 23, they are operating cash flow positive by $7.2 million. Not only that, they have increased their cash on hand from 16.9 to 18.1 million. So this company is also free cash flow positive because they spent $4.5 million on capital expenditure and capitalized exploration and evaluation. But with that cash flow from operations, they were also able to repay $887,000 of debt. So they increased their cash on hand and repay debt. So these are sort of some of the decisions the management have to make once they become operating cash flow positive. So these are the decisions that the management of this company is making, is to repay debt and also to just increase their cash on hand, also to spend money on capital expenditure and to capitalize the exploration and evaluation. So at this point in time, a really solid quarter for Catalyst Metals. And there's one reason alone why this was a solid quarter. And I'm a little bit wary whether those reasons will continue into the next few quarters. And it all comes back to costs. So one of the things I do look at is all-in sustaining costs. Also look at cash costs. But let's just focus on all-in sustaining costs, which just looks at all the money the company has to spend to not only get the gold out of the ground, but also to transport it and those sort of things. And I do like to compare the all-in sustaining costs for the particular quarter to previous quarters. And even if I do see a significant decrease in all-in sustaining costs in one quarter, doesn't mean that that's going to continue through the next few quarters. And that's definitely true, or has been true, for Catalyst Metals over the past year. So if we look at the bottom line here, all-in sustaining costs over the last 4 quarters, we can see it being quite volatile. So $2.5 thousand or $2,530 in the March quarter, down to $2,100 in the June quarter, up to $2,658 in the September quarter, and back down to just below $2,000 in the December quarter. If they can keep all-in sustaining costs down below $2,000 moving forward, that will be really helpful. But at this point in time, I'm a little bit skeptical they can, just because of the volatility in all-in sustaining costs over the past year. And if we look at some of the costs here, and I really like this table just because it shows you all the particular costs. And the majority of the cost looks like it is in mining. That's where we do see the volatility. Look, processing seems to be fairly stable. Mine and general administration seems to be fairly stable. And then we go down to sustaining capital. A little bit decrease in sustaining capital this particular quarter. But it's all about the mining, how much money they have to spend to get the gold out of the ground. And in this particular quarter, it was a good quarter for Catalyst Metals, and that's why they were operating cash flow and free cash flow positive. And the big question I have is whether they can continue that momentum moving forward. If they can, this will be really good for the company and its shareholders. And when it comes to operations for Catalyst Metals, it does seem like the most important thing to focus on when it comes to Catalyst, or this company, is the all-in sustaining cost. Because it does look like this company is not increasing their production or anything like that, because gold produced over the past year has been fairly static. We have seen a little bit of a tick up in gold produced in the June quarter and the December quarter. And the main reason behind that was the mine grade was a little bit higher in those particular quarters. So because, again, the mine grade does fluctuate just like the all-in sustaining costs, we don't know what's going to happen in the next few quarters. Maybe the mine grade will go down to like 3.3 or 3.1 in the current quarter, the March quarter, which would mean more than likely the all-in sustaining costs will go up again, and this company won't be as operating cash flow and free cash flow positive as they were in the December quarter. This company also sells gold, so they mine gold as well. So also keep an eye on gold prices if you're interested in this company. Now onto the charts for Catalyst Metals. We're going to look at 2 charts. A weekly chart here, which goes back to 2000 or start of 2017. And we're going to look at the daily chart in the next slide. And when you look at different time frames, like comparing the daily, weekly, monthly charts, you do get different viewpoints, different perspectives, that sort of thing. And definitely, that is definitely true for Callus Metals, because when you look at the weekly chart here, you can see a lot of hype, maybe not hype, but a lot of interest in this company from the start of 2017 all the way through to about the middle period of 2020. In fact, the share price went from 50 cents to about $3.50, or just shy of $3.50. And the record high in share price for this company was back in May of 2020, just after COVID-19 financial panic. You could actually see that a little bit of a dip, not little, it's actually a big dip in the share price, and then a V-shaped recovery, a rapid recovery in Callus Metals share price. In about 3 weeks, the share price went from about $2.20 to the high of $3.40. But since that high in about May of 2020, the share price has been in a downtrend, a pretty well-defined downtrend, just looking at the weekly chart. However, we have seen a little bit of bounce in recent weeks, but just by looking at the weekly chart, you'd say the share price is still in a long-term downtrend. But you do get a different perspective when you look at the daily chart. So let's have a look at the daily chart right now. Not only will we focus on the share price action, we also have a look at the volume. I like to look at the volume because that is telling us whether the market is becoming a little bit more interested in the company, particularly if fund managers are becoming more interested, and fund managers ultimately drive the share price much higher from when the share price is right now. We need to see fund managers become really interested in a company to get that rapid rise in the share price. As we look at the daily chart, a little bit of a different perspective here, because this goes back to November 2021. And in December of 2021, the share price reached a high of $2.20. And then the share price moved into a well-defined downtrend. In fact, it was a bad year for this company during 2022. Share price went from $2.20 to a low of about $1.05. And that low was reached like the 1st of November of 2022. But we have seen a little bit of a rally in the share price on the back of this particular December quarter results. In fact, the day they released these December quarter results, there was really high volume, and that high volume continued into the next day. We also saw a good increase in the share price, and the share price has continued to rally from there with continued nice high volume. So there are participants in the market who are excited by these December quarter results from Callus Metals. The other interesting aspect about the rise in Callus Metals share price, it's going counter to the gold prices over the past few weeks. So gold prices have been going down over the last 2 weeks, and that is in the complete opposite direction to Callus Metals. So that's really interesting. Now, I won't confirm, I won't say this is a definite shift in sentiment to Callus Metals. I won't say the share price is now in an uptrend, but it is moving in that direction. We have seen a higher high and a higher low, but the one thing that does concern me is all those investors who bought into Callus Metals at higher share prices during the past few years. Those investors are resistant. But the good thing is we are seeing higher volume, which means there's a better chance those investors selling out because they bought in higher prices over the last few years, there is a more demand for those shares. And that's a good way to keep seeing the share price rise, particularly if there are some small cap fund managers who saw these December quarter results and are now interested in taking position in this company. Those are the fund managers we want to see taking positions in this company to drive the share price higher from here. That's all I have looking at Callus Metals December quarter results for financial year 23. Nice reaction from the market. Share price has been going up over the past few weeks on the back of the December quarter results. If you have any questions about this company, if you are a shareholder of Callus Metals and you do have any further insight into this company, I'd love to hear your opinion. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.